Hello, savvy investors, and welcome back. It's the Dividend Uncle here, ready to dive deep into the currents of the REIT market with you. Since hitting a low in October 2023, the XOP I EDGES REIT Leaders Index ETF saw an impressive surge of 19.6% by year-end. However, the tides have turned in 2024, with most gains receding, leaving us with a modest 5.5% uptick since last October. This pullback, largely due to expectations of a delayed U.S. Fed interest rate cut until the second half of 2024, has tested the resilience of REIT investors. Disappointment? Frustration? Complaints about how Singapore's stock market is the perennial underperformer? To my surprise, no, the spirit of the REIT investors remains unbroken. Investor sentiment, a surprising show of confidence. In the ever-fluctuating world of REIT investments, understanding investor sentiment is like catching a glimpse into the future. To get a pulse on what you, my dedicated viewers, think about the REIT market's trajectory, I turn to our trusty YouTube community posts for answers. In the most recent survey, I added a poll on Investing Note, a newfound forum of friendly, active investors, as well. The surveys, conducted in December 2023, January 2024, and March 2024, revealed a story of unwavering confidence and optimism, even as the market sent mixed signals. December 2023 survey, with the market riding the high wave of a 19.6% surge since October, optimism was in the air. The results showed a bullish stance, with 62% of respondents believing that REITs had more room to run, anticipating even higher climbs. The graphic snapshot of this poll captures a community poised on the brink of further growth, their hopes as high as the year-end market peak. January 2024 survey, as the new year unfolded and REIT prices began to level off, one might have expected a dip in investor morale. Yet, the opposite was true. A remarkable 73% of you remained steadfast in your belief that REIT prices would soon begin their ascent again. This survey result, set against the backdrop of a stagnating market, highlights a collective confidence that defies the standstill, showcasing a community ready to weather the storm. March 2024 survey, fast forward to March, and the landscape had shifted once more. With REITs having relinquished a substantial portion of their gains from the October surge, the moment of truth had arrived. But instead of retreating, an astounding majority or more than 90% of viewers expressed their intention to continue investing in REITs in the coming months, undeterred by the recent downturn. This overwhelming optimism, captured in the March survey's visuals, underscores a belief in the sector's resilience and the anticipated benefits of future interest rate declines. Each of these survey snapshots tells a part of the larger narrative of investor sentiment over the past few months. Together, they paint a picture of a community not just hopeful but confidently awaiting the next upswing in the REIT market. This sentiment forms a compelling testament to the enduring faith in REIT's potential, even in the face of market volatility. The Dividend Uncle's take, positioning for the inevitable upturn. In this climate, where does the Dividend Uncle stand? Firmly with you. I'm putting my money where my mouth is, focusing on a mix of market leaders and a small cap gem known for its exceptional growth potential. These selections have not only demonstrated resilience but now, thanks to recent price adjustments, offer compelling value relative to their quality. Let's take a closer look. Frasers Logistics and Commercial Trust. In the bustling world of e-commerce and logistics, Frasers Logistics and Commercial Trust emerges as a standout performer. This trust, with its strategic investment in high-quality logistics and commercial properties, is ideally positioned to capitalize on the global surge in online shopping and the consequent demand for efficient logistics solutions. Its diverse portfolio of 108 buildings and asset value of $6.7 billion spans across key markets in Europe, Australia, and Singapore. Frasers Logistics and Commercial Trust's Q4 2023 result was impressive, with overall rental reversion rate at 18.2%. While its logistics segment did extremely well, buoyed by demand to cater to vulnerabilities in supply chain, its commercial segment was seen as a concern, with a few properties in UK and Australia having occupancy rates at 70% to 80+%. As sentiment around the Frasers Logistics and Commercial Trust has weakened, so did its share price. It is now at October 2023 lows, with an attractive dividend yield at about 6.8%. I'm unfazed, looking at its low gearing ratio of around 30%, and the strength of its logistics segment with rental reversion of 51%, I will be investing in it. Capitaland Asset Trust. A beacon in the hospitality sector, Capitaland Asset Trust stands out for its global portfolio of serviced residences and rental housing properties. With tourism on the rebound, this REIT is well positioned to capitalize on the resurgence of global travel. The impact of this resurgence can already be seen from its Q4 2023 results. Capitaland Asset Trust reported a stunning 14% increase in distribution per unit or DPU. Despite that, its current share price has dipped along with the overall market, and is now only about 5% above the October lows. With dividend yield around 7.3%, and everything going right for Capitaland Asset Trust, it is definitely one of my top picks. Mapletree Logistics Trust. Specializing in logistics real estate across Asia, Mapletree Logistics Trust is a key player in the e-commerce boom. Its expansive network and strategic assets make it a solid choice for those looking to leverage the growth in online retail and growth in trade. Despite relatively solid performance, with rental reversion up 3.8% and DPU increasing 1.2%, fears about slowdown in China logistics sector, which accounts for about 20% of Mapletree Logistics Trust's assets, resulted in recent weaknesses in its share price. With this blue-chip REIT share price now at October 2023 lows, dividend yield at more than 6%, and my belief that trade and logistics will continue to thrive in Asia, I am keeping my faith and my money on Mapletree Logistics Trust. Far East Hospitality Trust. Last but not least, Far East Hospitality Trust is focused on Singapore's vibrant hospitality scene. The Q4 2023 results outperformed other REITs, with all its underlying properties performing above the minimum rents. This resulted in the distribution per stapled security to increase by 25.4% for 2H 2023. Looking forward, it is primed for the anticipated surge in tourism, especially with events like Taylor Swift concerts drawing crowds. Its strategic properties around Singapore are set to benefit from the increasing influx of visitors. With this financial outperformance, its share price is still about 7% above the lows, but has fallen from its peaks. With a dividend yield of about 6.8% and potential capital appreciation, I have high hopes for this small cap REIT. Noteworthy mentions: the quality stable performers. While the spotlight shines on the above REITs, it's important to acknowledge the steady hands of other REITs like Capitaland Integrated Commercial Trust, Frasers Centrepoint Trust, and Daiwa House Logistics Trust. These stalwarts have maintained such stability in their share prices amid the year's fluctuations that they haven't appeared as cheap opportunities compared to their counterparts. Their resilience and consistent performance keep them in high regard as top-class assets in the REIT landscape, even if they're not the focus of today's investment strategy. I will continue to monitor these REITs and am prepared to invest in them if there are weaknesses in their share prices going forward. Conclusion. As the REIT market navigates through short-term headwinds, the undiminished investor confidence paints a promising picture of resilience and potential. By strategically aligning our portfolios now, we're not just waiting out the storm but preparing to harness the forthcoming upturn. Remember, investing is about foresight, readiness, and seizing the right opportunities at the right time. If today's discussion sparked new ideas or reaffirmed your investment strategy, make sure to subscribe, like, and share your thoughts below. Together, let's stay ahead of the curve and turn these market dynamics to our advantage. Until next time, keep investing smartly and confidently.